Our main focus point on InvestTalk today is about debunking the myth that the US dollar is about to collapse. You might see headlines, you might see YouTube videos, you might see social media posts about the dollar's demise. And overall, I will say there are signs of cracking in the dollar system that is driven by, obviously, the tariff regime, driven by cutting off Russia from the SWIFT system and confiscating their treasuries, for example. And that has pushed central banks away from buying dollar-denominated assets in a big way. But that's only one pillar of dollar demand. The other two major pillars are trade, which is much bigger, right? And the tariff regime certainly threatens that to a degree. So if our trade deficit shrinks, that will decrease the demand for dollars, but it's not going away, right? It's just weakening overall. But the biggest factor and biggest demand for dollars is actually lending, not just domestically, but abroad. Most loans throughout the world are denominated in dollars, and when you need to pay back that loan, you need dollars, whether you make your living in a different currency or you have a company that has business in multiple countries around the world, you still need to translate those currencies back to dollars to pay those loans off. And so that is a huge source of demand for the dollar as well. So there are multiple factors that have created this dollar denominated global system that we have. And could it decline over time? Yes, but it will probably take many decades. But if you look back in history, pre the Bretton Woods system, we had the UK or the British pound as the reserve currency of the world. And that took many decades for that economy to weaken and become competitive for the dollar and the US economy to pass it. So this is something, we're still the largest economy in the world. We still have a lot of strengths embedded, but you are starting to see cracks, but it won't create a collapse in the dollar overnight.